A $6,000 Bitcoin crash just sent a major warning to the stock market. Hey everyone, let us talk about what just happened in crypto, because if you think this is just a Bitcoin problem, you might want to think again. What is unfolding right now in digital currency markets could be the early warning sign for stocks that most people are missing. So what triggered this? Overnight, Bitcoin absolutely nosedived, shedding over 6% of its value. That's a drop from above $91,000 to around $85,600 in less than a day. And it wasn't alone. Ethereum got hit even harder, tanking nearly 9%. But here's the critical part. This isn't just another random crypto shakeout. The roots of this sell-off trace back to a classic, high-stakes trading play on the other side of the world, and it's starting to unravel. The domino that's starting to fall. The yen carry trade. For years, big investors have used a strategy called the yen carry trade. Here's the simple version. They borrowed Japanese yen at super low, often near zero interest rates, then used that cheap cash to buy higher yielding assets like US stocks and cryptocurrencies. It was basically free money to fuel rallies. But now the game is changing. The Bank of Japan is signaling it may finally raise interest rates to fight inflation. When Japan's rates go up, the yen becomes more expensive to borrow. Suddenly, that free money trade isn't so free anymore. This creates massive pressure. Traders who use cheap yen to buy Bitcoin and tech stocks are now facing a tough choice. Sell those assets to pay back their now more expensive loans before losses stack up even higher. This doesn't just cause a sell-off, it pulls liquidity, cash, straight out of the entire market system. As one market strategist put it, draining that liquidity would not be good for the stock market, and we're already seeing the connection. On the same day Bitcoin plunged, the Dow dropped 427 points. The bigger picture, a risky end to the year. This is part of a nervous pattern. Remember Bitcoin's epic crash in late November. It dragged tech stocks down with it, contributing to the Nasdaq's first down month since March. Now, with Bitcoin still down over 30% from its October peak, the fear is that continued stress here will kill any hopes for a classic Santa Claus year-end stock market rally. In a clear sign of this anxiety, money is fleeing two classic safe havens. Silver prices hit a record high on Monday. Gold is having a monster year. This is what investors do when they get nervous about risk. The bottom line, we're at a critical moment. Proponents will say crypto volatility is normal, but critics point out that this kind of swing undermines Bitcoin's argument as a stable store of value. Meanwhile, the S&P 500 is still hovering near its all-time highs. The takeaway: the markets are deeply interconnected. A policy shift in Japan can trigger a crypto crash in Asia, which can spark a sell-off on Wall Street. The all-clear signal hasn't been given. As one analyst warned, the developments out of Japan are creating real uncertainty, and we are not out of the woods quite yet. What's your take? Is this just a temporary shakeout or the start of a bigger risk-off move? Let me know in the comments below, and don't forget to subscribe for more breakdowns on what moves the markets.